Good afternoon. This is Ken Jolliffe at BIS Commodities here in Cedar Rapids with your weekly agricultural, livestock, and grain futures update. For the week here, grain markets on the corn, basically a steady trade. Wheat was a steady trade. Soybeans were the shining star, being up anywhere from 25 to 30 cents. The week was pretty much dominated by weather. The wet weather talk of parts of Missouri, Kansas, out into southern Illinois, parts of Indiana. As we saw, heavy rains from Tropical Storm Bill continue to hover over those particular areas here even yet this afternoon. As we take a look at things, the crop ratings for the week were down 1 to 2% for both corn and beans. The main issue is naturally the planted acres, as we said, in Kansas and Missouri, where we're talking about maybe 3 to 4 million acres of soybeans that are yet to be planted. Now, looking at that here towards the end of the week, the actual wet areas of those particular states did not see as much rain as they did, say, St. Louis and into the boot hills of Missouri. So it'll be interesting as we see the USDA's progress report Monday afternoon to see if we got any acres down through that sector of the country planted. Now, as we take a look at the maybe the Midwest and the Corn Belt as a whole, it appears to me that we have pretty much flip-flopped the belt around compared to the previous 2 or 3 years. If we remember back last year, it seemed like the areas of north central Iowa, up into parts of southern Minnesota, southwest Minnesota, and even into some areas of the Dakotas, were the wet areas during the month of June, and areas where we saw some prevent planting taking place, to where this year now we're talking about stuff in the more eastern Corn Belt, parts of Illinois, Indiana, and of course, as we said, Missouri. So it'll be interesting to see what the government shows us for progress next Monday afternoon, and to see if it's as we move forward towards the June 30th reports, it'll show us the stocks and acres at that particular time. Now, talking about the acres, Informa did come out this morning, updating their planted acres ideas. Corn at 88.8 million acres was down just slightly from last month, and it's down just slightly from what the USDA posted back on March 31st. The soybean acres of 84.7 were down about 600,000 to 700,000 acres from their estimate last month. But taking a look at it, Informa's numbers are still running about 2 million acres above what the USDA showed us back on the March 31st. So there comes the debate as we move forward to the June 30th time frame as to were the USDA numbers conservative going into to the planting season, since we have seen prevent planting acres in the past 2 to 3 years, and how will they come out with these numbers on that particular time. And then, of course, the stocks numbers, as we continue to see old crop corn bases deteriorate here during the last couple of weeks, as cash marketing has picked up some, particularly in the western Corn Belt, as the crop conditions have looked pretty decent out through here, and it seems that's where the greater stocks are probably going to be posted at, is in the western belt of, say, Iowa, Minnesota, and up into the Dakotas. So we'll work towards those June 30th numbers, and that'll probably be your next market mover, going into that 4th of July time frame. Now, the weather, real quickly, as you look at it in the 6 to 10 day, 8 to 14 day, which is now stretching us out into the 4th of July weekend, it appears that we're in an area here in the Midwest to where we're going to see more of a normal temperature range, more normal rainfall range. It seems like the heat will stay out into the Rockies in the west, and then down in the southeast part of the country. So we may get a chance to dry out and see these corn and bean crops just flourish here in the next couple of weeks. So livestock side of trade here this week, again, cattle market basically unchanged, both in the fats and the feeders. And the future side of things, hog market was the one that took the downward move here this week, as the futures were down anywhere from, say, $2.30 to $3.50, looking at the deferred months. The hog markets continue to see some heavy slaughter rates this week, so we've got a lot of pork going on the market here right now. Futures-wise, we've moved these futures back down towards the March 30th time frame lows, so maybe we'll get a slight bounce off those here starting out next week. Cattle side of things, the cattle on feed report this afternoon, the marketing numbers were at 92%. The estimate there was 91.6. Placement was at 90. The estimate was 91.4. And on feed at 101, estimate at 100.9. So taking a look at those numbers, you probably would call them neutral going into Monday morning's trade. To me, it still continues to be whatever the cash market wants to trade will dictate the direction of the futures. But the cattle side of things was basically flat for the week as said, and maybe we go flat starting out the first part of the week at that same time. So with that summary of things, wish everybody a happy Father's Day, and we'll see you next week.